Okay, and we are back. After the bottom of the hour break, Fred Dashevsky joins us. And, of course, we're by phone. You know, technology, right, Fred? When all else fails, low tech works.
When all else fails, a pencil and a piece of paper will suffice.
Fred joins us normally here on the show to talk about the economy because, as you know, the economy is hugely important. How you invest in the economy is even better. I have told people constantly that you need to be thinking about if you're not doing well in the stock market right now, this might be a good time to get out of it, especially if your financial investment advisor is trying to keep you in bonds because bonds are not always where it's at. And you can see, I guess, Fred, you could explain a little bit about how bonds work as far as the Treasury goes. Why do investment bankers and your brokers and people that you call at your local investment advisor and financial planner keep wanting to stick you with bonds? Is it because they're safer, or how's that work?
Well, you know, you hit the nail on the head there. That is the theory. So when it comes to investing, a lot of times there is a very conservative approach that's taken by the more conservative investment advisors. So if you go to a bank, for example, they're not going to recommend that you do anything that would be risky. They're going to try to provide you with the slow, steady kind of turtle, as it were. And, you know, the benchmark for investing in the world has always been the United States government treasuries, particularly the 10-year bond. And this is a purchase that you make from the United States government. And effectively, you're loaning your money to our government so that you are participating within the market and you're allowing the government to use your finances to support its needs. For this, they will pay you a relatively stable rate of return. 3.8% is the current 10-year yield, and that's considered the benchmark. The idea being that because this is a government debt instrument, you know, the idea of the backing by the good faith and credit of the United States, that's the kind of expression that they use, effectively meaning that unless the entire United States government defaults, this is a secured investment. Unlike, for example, if you invested in a stock, in theory, there's nothing to prevent a particular company that you bought stock in from going bankrupt. You know, there's nothing supporting it except its own participation in the world and how it does its business. So the bonds are considered extremely safe. The downside to them, though, is, of course, they're subject to changes in their purchasing power as interest rates change. So let's say, for example, you bought a bond at today's rate, and then interest rates then go up, and now you could buy a bond that pays a little bit more. So what happens to the person that bought the bond that's paying less? Well, he has two options. He can sit on that bond and just let it mature and earn that interest he's locked in, or he could try to sell his bond back into the open market, which will bring less and less to him the higher the interest rates are for current bonds. So the bond market is stable, it's considered safe, and it is based upon the current level of interest rates. And this is why everybody pays such close attention to the circus of the economy, with the center of the circus being the tightrope walker, which is Jerome Powell, trying to manage this economy by keeping these rates to where they're attractive enough, they gain enough, but they don't stimulate economic activity that causes inflation to get out of control. This is the battle they've been fighting for years. Whether or not they've been successful at it is debatable. I find it's problematic that the whole thing exists in the first place. But generally, again, this is what the concept of owning bonds comes down to: security and safety, and a guarantee from the U.S. government that you will get your principal back and those interest payments.
Right. And the sad thing about it is, and we've talked about it on the show before, Fred, is that this whole system is operating off of fiat currency because they're nothing but debt notes, and people still have a hard time grasping the fact that we actually have a constitutional currency. And I think, Fred, you know, you deal in this constitutional currency on a regular basis, and that currency is courtesy of the U.S. Mint.
Absolutely. You know, so back in the early portions of the formation of the United States as a new country, you know, this was a concern that came out of a lot of the founding fathers, let's call them, about how we should establish a monetary system for the public. And they had seen the detriments of money systems going awry, with the King of England. Even as a sovereign king, he became subject to the bankers that loaned him money for the wars that England was fighting, constantly found themselves in debt, constantly having to borrow money to raise capital, and would do so by virtue of using bankers that would then charge tremendous amounts of interest, and in ways ended up affecting policy even with a sovereign king. So in the United States, our founding fathers were really concerned. They didn't want the public to be subject to the whims of, either politicians or even events that might occur. So they came up with this system, and they said, look, there are certain things that have been around for a long time that have their own value. We don't have to inform somebody that an ounce of gold or an ounce of silver actually has value. That's been well established for thousands of years. And it's because these are physical items. They're difficult to produce. They have tremendous properties that can be used for multiple purposes. They have survival properties that are fantastic. They don't deteriorate. They don't rust. So it became a very smart, stable way to establish a currency system. So they specifically laid out in the Constitution that nothing should be considered money except gold and silver coin. The idea was if we establish this as the basis, it becomes a foundation that's irrefutable, and it will stand the test of time. And as we've seen, that would have been the case. The problem became that, it's very difficult for any government to sustain a constitutional currency or anything backed by gold and silver, because part of what it does is it constrains the ability of a government to create unbacked money. So if we don't have a fiat currency, and that means we actually have a currency backed by something, you can't overprint the amount of money that you have in your economy. That would prevent inflation from running away. It would prevent the prices of things from increasing too much, but it also prevents the government from spending more than it can bring in. And this is where the problem became problematic for the government. They could not control themselves, constantly found themselves spending more money, and eventually they had to give up the ghost and say, look, we just can't afford to do this. We can't pretend to do it anymore. So we're going to a fiat system, and we're just going to ask the public to trust us that we'll do the right thing and maintain the value of this currency. And by 1913, we had established the Federal Reserve System, which was supposed to do two things: stabilize the working environment and also to create stability in the economy and the value of currency. And if we look at what a dollar was worth in 1913 when the Fed took over, and we compare that to the dollar's purchasing power in today's world, it has lost about 97% of its original purchasing power. So how did the Fed do?
Yeah, they bombed big time. And this is the thing, people are, and they play the stock market, and they're doing it based on fiat currency. And everybody knows that the stock market is a rich man's game. And those who say, yeah, but I've got a pension, I've got a 401k. Well, we saw what happened to those 401ks in 2008 when the bond markets collapsed and everything collapsed. We came very close to another great depression. I mean, we got seriously close. The bigger problem is it affected the housing market. And so, people are looking at this thing going, okay, we don't know. There's a lot of naysayers out there that think that that we're going to be okay. And it's just people overreacting. I just kind of shrug my shoulders and I go, the thing is there's a lot of people out there that are calling Fred Dashevsky at US Coin Capital and emailing him through the website at uscoincapital.com. And they're asking him questions like, well, wait a minute, I got to start stocking up on silver and make this a regular thing because I don't trust the U.S. government. I don't trust the currency, the fiat currency they're playing in. And at some point in time, that currency is not going to be worth anything, but I know my gold and silver coin will be worth something. And as prices would have it these days, both are going up. Gold and silver coin are going up.
Absolutely. So gold is now $2,650 an ounce. In fact, I just had a chat with somebody I used to chat with just 2 or 3 years ago. And on July 4th, gold had hit 1776. And we were just commenting on the fun of that, July 4th, and here's gold at $1,776. Well, today gold is $2,650. And this increase that we've seen in the past couple of years has been directly tied to the weakening purchasing power of paper money. Gold's price itself, for those that are fairly new to this or any new listeners, there really are four factors that contribute to the daily price of gold. You have the industrial demand, you have the investors, you have the mining production, and you have central bank purchasing. All these things contribute to the daily price of gold. All these things are moving it higher, and I think this trend is going to be continuing going forward.
All right, we'll continue the conversation after the break. Ladies and gentlemen, boy, getting a financial education this morning about the reality of life here on the Krieger Files. Stay with us. All right, back in the saddle again here at 48 minutes after the hour, and appreciate all of you joining us today. We're getting a real education here as far as finances go and why you need to be investing in gold and silver coin. I keep encouraging all my friends, look, you guys need to call Fred. If you want an education, you want to talk turkey with somebody that really gives a damn, I buy my stuff from Fred. I get junk silver. I'm a big junk silver collector. I love those quarters, the dimes and the halves. That seems to be the best denomination. I'm really staying away from silver dollars these days. Is there an advantage or disadvantage to collecting one form of junk silver over another, Fred?
In the end, it's really just about accumulations. In particular, the only time there's a quote-unquote advantage is sometimes there's a lower premium on one over the other. So we've seen a weird split this year where dimes and quarters cost differently than they used to. They used to be the same premium, and now they've split. So 50-cent pieces and dimes carry a slightly larger premium than quarters. So it's made quarters right now, by 15 or 20 cents, just a little bit less expensive per coin, per ounce, with a premium over silver. Other than that, it really doesn't distinguish itself dramatically. So there's almost no wrong way to go. I basically would pose the question to the listeners, going forward at this point, what you know about the economy notwithstanding, whether you're well educated or not educated at all, it really comes down to just one question. Do you believe 5 or 10 years from now, the paper money you're holding will buy more or less goods and services? And if you've concluded, for whatever reason, that the money system has established a process by which the likelihood is very strong that the paper money will buy less goods and services in the future, why would someone store the balance of their long-term wealth in that form? If you know it's going to buy less, do something about it. And this is why we encourage investors to recognize this problem is huge. It requires a tremendous amount of understanding. From a politician's standpoint, I realize we have an election coming up. I will say this, the election will come, the election will go. And regardless of the results, the same thing is going to happen. They're going to spend more money than they bring in. It's simply a question of by how much, how fast, and what process they choose to do it. The end result of all this extra spending that we don't have funds for is the printing of additional capital. The more money we print that's all fiat, that is unbacked money, the weaker the value of that currency gets, unless the economy can grow so rapidly to absorb all this extra capital. It's just not happening. And I don't see the economy's ability to grow fast enough anywhere near the rate it would have to absorb the monstrous amount of paper money that we've been printing. In fact, the government ran out of money again just this past week. They have to pass another continued resolution to push forward the problem to say that they have to raise the debt limit. And this is the ridiculous game the government plays to try to control its spending. It sets limits and says, if we ever get to a point where we have spent this much, we're going to put the brakes on. We're going to start instituting emergency policies. We're going to cut government spending or services dramatically or do something. But politically, nobody ever wants to do that. So they don't. And what they do instead is they pass a new law that allows them to spend more money than they previously agreed to go into debt. And they've been playing this game for decades. So this will continue. So again, I would recommend to people, if for any reason at all, you either believe or have concluded that paper money is going to buy less in the future, take some of the capital you have in today's world and put it into something that actually goes up in purchasing power. I mean, consider those silver quarters that you mentioned, Dave. 1964, 5 silver quarters was the minimum wage, $1.25. And at $1.25, A American could buy a home, feed a family of 4, and put away enough savings to take a vacation about once a year, just earning minimum wage. One quarter bought you a gallon of gas. Today, that silver quarter, $6 or $7 or so in value, probably buys two gallons of gas. But anyway, its purchasing power has not deteriorated. So it's a safe haven for those that are trying to protect their wealth. I cannot encourage people more to try to grasp an understanding of the nature of fiat money and what that means for the average person, keeping in mind that there really is no political solution left because we've really let this get out of control for so long. Right now, the $35 trillion worth of debt we carry is becoming so problematic, we could barely make the interest payments. And if you've ever been in debt as an individual, you can understand that. If you could barely pay the interest on credit card debt, for example, you're never going to get ahead of the curve. And that's where we are as a country. So, again, I would encourage people to try to do a little homework and get a little fundamental grasp what it meant when the Constitution provided us with gold and silver coins as the legal standard for money. These guys, when they came up with this idea, were not being frivolous. This was well thought out. This was debated amongst some very intelligent people. And I believe they hit the nail on the head. I believe they understood the nature of the problem and came up with a viable solution. The Constitution still stands. That provision has never been repealed. Article 1, Section 8 provided for gold and silver coins. And I believe that Americans should stand on their constitutional rights and demand that we have constitutional money. If the government will not provide it to us now in current money, then we need to gather up that existing value within those that still are around, these pre-1965 dimes and quarters and halves and pre-1933 gold coins. This should be in the hands of the public, and people should be aggressively building a position in this form.
And there's so many of these things that were minted at the time that no longer are minted. In fact, they diluted even the coinage in America. So everything pre-1965, folks, is something that if the dollar is that weak, and here's these people playing the stock market, and on any given day, when something goes weird, they could lose thousands of dollars. Those thousands of dollars they could have pulled out of the stock market, invested in themselves, bought silver coin, bought gold coins, held on to them, and preserved their wealth. But the thing is I don't know what it is about. I guess it must be we have a bunch of obsessive gamblers out there that think the stock market is where you can get rich and make all your money. But, the thing is the people that seem to be making all the money are the brokers that are getting commissions off every transaction.
That's always been the case, right?
Yeah.
The biggest players in the markets are Vanguard, Fidelity, BlackRock. I mean, between them, they control probably close to 20% of the entire stock market. So that means, 3 companies effectively have so much effective power that they could change the direction of the market at will. That's a dangerous position to be in. Now, I don't think that people shouldn't necessarily not invest in stocks at all or even the bond market. I think there's a portion of that that's appropriate for a lot of people, depending upon your age and income and what you try to accomplish. But I just think the idea of keeping 100% of one's wealth in these paper funds or in markets that are so volatile is problematic. And I think having a little bit of, I call it wealth insurance, to me, it's the same analogy as having flood and fire insurance. So, I'm in South Carolina. We have, really bad storms here, and we get flooding problems like we just recently had. A big storm come through here, and fortunately we got away with just a lot of refuse problems, branches and trees falling down. Not too much overwhelming damage, but it could have been much worse, and was in a lot of areas. And I have flood insurance on my house, and I have fire insurance on my house. And it's really not because I expect one of these storms to wipe my house out, but it's the idea that I have an asset that's very valuable, and it has to have some minimal protection. I don't like having to write that check every year for the flood insurance, but I do it because it only makes sense. And I look at money the same way. If you think of it in those terms, financial wealth protection is like insurance against the idea that something might go awry with the U.S. dollar. And since there are so many things happening in the world, You point out the war in what's happening in Israel. You have the problems going on in Ukraine and Russia. I mean, there's a lot of destabilization. And in times of uncertainty, paper currencies don't do well. But gold and silver happen to perform very well. So again, it provides a lot of financial stability and maybe even some mental stability, a little safety in the mind for those that want that protection. But I just believe it makes sense to diversify one's wealth because there are things that are out of the public's control that were never supposed to be. We had this locked with the constitutional money, but since the government refuses to do that, and that's what makes those pre-1965 coins more valuable, they were actually made of silver. So they are physically silver, where the ones that came out in 1965 and after that don't have silver in them. That's why they don't have value. So that's the point of which owning these pre-65 coins makes so much more sense. Not only are they made of that metal, but none of them can be reproduced. We can't make more of them. So we're only dealing with whatever has survived over the decades that hasn't been melted, destroyed, or buried away for people for future generations. Whatever limited supplies exist, that's all there ever will be.
Yep. So do we have anything of interest that you're offering any of our listeners out there today if they call you?
I've always got some things available, so depending upon dollar ranges, I definitely have a few goodies for the listening audience. And anybody who calls from your show this week, I'll also throw in a Red Seal United States note, a U.S. note, free of charge. Just something I want people to see as an interesting historic perspective.
Wonderful. 1-800-878-2646. Get on the phone right now. Call Fred Dashevsky. Tell him you just heard him on the show. Take advantage. That's a heck of a deal. Anyway, we're going to hopefully try to get these little technical bugs out of the system by tomorrow. In the meantime, take care of yourself. Be kind. Shop at uscoincapital.com, and we'll see you tomorrow.